If you don't have a trading plan, you're gambling. If you don't have discipline, then you probably won't even follow the plan. In today's video, we're going over day 1 of the boot camp, which will be covering discipline, learning from losses, and having a real trading plan, which is the foundation of becoming a profitable trader. Stick with me throughout this video, and you might notice that discipline might be the reason why you're unprofitable. I'm going to give it to you raw and uncut. Discipline is so important because the market simply doesn't care about your emotions. The market cares about consistency, doing the same thing over and over, no matter if you like it or not. Doing things like overtrading, revenge trading after taking a loss, trading out of boredom will ultimately make you an unprofitable trader. Discipline is doing the same thing over and over no matter the results, no matter if you like it or not. Discipline will separate you from the rest of the traders. There are a million people in this world who want to trade and become profitable traders. Only around 1% of those people become profitable traders. I feel like this has a strong thing to do with discipline. What helped me with my discipline in the beginning? Well, to be honest, I had no discipline in the beginning. I was just a trader who wanted to become profitable fast, thinking about fast money, thinking about ultimate money, which is trading. Trading is an unlimited source of money, but you have to learn the skill first. You have to have the discipline to walk away from a losing trade and learn from that trade. This is why having a trading plan is so important. Your trading plan should consist of things like your entry confirmations. Are you entering off of a breaker structure? Are you entering off of liquidity sweep, inverse fair value gap? Are you entering off of an order block? Are you entering off a retrace into your Fibonacci? Whatever your strategy is, make sure that you're following that strategy. Don't take trades that are outside of that strategy. As well as your trading plan should consist of risk management. How much are you risking per trade? My advice is to risk 1 to 2% per trade, which means if you have a $100,000 account, you should only be risking $1,000 per trade out of that account. If you have a $50,000 account, you should only be risking $500 per trade. This will ensure that you build consistent income and consistent profitability over a long period of time. Now, I'll be sharing my screen to show you my trading plan, how it helps me stay consistent and disciplined and become a better trader, as well as the ratios and pre-designated risks I use, and how this correlates a lot in trading. So this is my trading plan. I have it broken down into 4 major components. Pre-designated risks. When do I trade? What am I trading? And how do I enter a trade? And what are my confluences? So for my pre-designated risks, like I said, 1 to 2% of my account a day. 1 trade a day. If I lose, I am allowed 1 more trade, risking half of what I risked the first trade. Set lot size, 1 to 2 minis, or 10 to 20 micros. When do I trade? New York Stock Exchange open only, 9:30 to 11:30. If I don't catch my trade within these times, I'm off the charts. If news, exit all positions 5 minutes before news starts. Don't take a trade until 5 to 10 minutes after news ends to let market recover. And no trading on one direction or no news Fridays or days in general. What am I trading? NASDAQ, the MEQ only, ES, or MES only. How do I enter a trade? What are my confluences? Daily bias, liquidity sweep, inverse for value gap. Daily bias, liquidity sweep, breaker structure, retrace into continuation confluences, whether that's equilibrium, fair value gaps, order blocks, IFVGs, etc. And then daily bias, SMT diversion, liquidity sweep, breaker structure, or inverse fair value gap. Most important parts of entry is daily bias and liquidity being swept. So now I'm gonna kind of like break down why the pre-designated risks matter and go over the ratio of risk. So I'm just gonna go back and go over the trade I took earlier today, which was a 2-to-1, which was a 2-to-1 risk to reward ratio. Two to one. Two to one risk to reward ratio. And the ratio I like to do, or I like to be around in my trade, is either a 2-to-1 or 3-to-1. Why is this so important? Let's look at it like this. So 3-to-1 means I'm risking 1% on a trade to make a 2 to 3% return, which means I can lose. A lot of people don't like to talk about losing, but it's gonna happen in trading. So I can lose 2 to 3 trades in a row and make, that's 2 to 3 losing days in a row, and make my profit back in one, and still make my profit back in one trade. As a beginner trader, I know I did this. We often think about the right now, like what's my daily P&L, how much did I lose today, I just lost that trade, I gotta take another one. No, that's where revenge trading comes in, and that's how you lose even more money. Sticking to this, risking 1% on a trade to make 2 to 3% returns is okay. That's the best way to do it, because like I said, if you lose 2 to 3 days in a row and you win that third day, or you win that second day, then your weekly P&L is positive. You're break even on the week. You're building consistent income over time. Don't get so stuck in a losing trade, or don't get so stuck in a losing day. Worry about the long term of things. Worry about, am I up on a week? Am I up on a month? Am I up on a year? Because that's what building income is. That's what being profitable is. It's not, anybody can be profitable for a day. I can get someone who's never seen a chart before and they can guess the right direction and be profitable for a day. But being profitable is truly being able to keep that consistent growth over a long period of time. And having a trading plan, having a designated risk, having discipline, risking that 1% every trade to get that 2 to 3% return, walking away from your screen once you lose that trade, journaling, which I'm going to go into after I get done explaining the trading plan, journaling your losses, journaling your wins, learning from your losses, learning from your wins, is how you become a profitable trader. Taking that loss, looking at the screen, walking away, coming back, journaling what you could have did different, asking yourself, did I follow my trading plan on this trade, or did I not? Did I risk 1% on this trade, or did I not? did I walk away from this trade or did I overtrade? Did I walk away from the charts? Did I take one or two trades a day? Did I take one trade and get off the charts? Or did I continue to look at the charts because I was bored and say, oh, looks like it's gonna go up. I'm gonna take another trade. Looks like it's gonna go down. I'm gonna take another trade. Things like that, decisions like that, not being disciplined is what will hinder you forever. Hinder you forever. What one of my mentors said to me, stuck with me and helped me become the trader I am today. He said that in order to be a profitable trader, you have to be a good loser. And I know as kids, as we grow up, what's installed in us is losing is bad. Well, I'm gonna let you know right now, if you think you're going to trade and be able to trade and become a profitable trader for long periods of time and not take a loss or not lose, then you're wrong. The best traders, 9 times out of 10, most of the times they don't even have the best win ratio, the best win percentage. They just are so good at being disciplined and walking away from their charts and managing their risks that they are profitable in the long run and they stack income, and that's what it's all about. So now that we went over the risk part of it, now I'll show you my trading journal. So this is my trading journal. The most important parts of this trading journal, this goes hand in hand with the trading plan. So this is my trading journal. The most important parts of this is your numbers of trades that you took, the trading date, the day, the pair you traded, the concept you use or the type of trade, the time frame you did the trade on, whether it was a short or a long, win, loss, break even, the range. Did this trade reach full TP? Did this trade move as fast as you thought it was going to move? As well as the risk. How risky was this trade? Your P&L, how many risk factors? How confident were you when you took this trade? The duration, how long you were in the trade? Your pre-market notes and your pre-market / pre-trade notes and your post-trade notes. And I like to attach pictures of the trades I took to let you know what you could have done better. So long story short, discipline is the most important part of becoming a trader. And a trading plan, and without a trading plan, you are essentially gambling. And if you want to gamble, why not just download a sports betting app? No, but in all actuality, if you don't have a trading plan, you're gambling. Like I said in the beginning, and if you don't have discipline, you probably won't follow the trading plan anyway. Trading plan without discipline equals still losing. Discipline with no trading plan equals confusion because you don't know what you're being disciplined to. So that's pretty much all I had to say about discipline for this video. I'm gonna give you all homework. Homework is to day 1 boot camp homework. Yeah, you gotta treat trading like a job in school. So this is your homework. Yeah, the only thing about this is if you do this homework and you pay attention to these lessons, then you will make money. And I'm actually teaching you how to make money. So, yeah. Anyways, day 1 bootcamp homework. Have a plan. Create a plan. Create a trading plan. Trading plan. Create a trading plan. And what else? Oh, look at yourself in the mirror. And if you traded today, or you're looking to start trading, or whatever status you're in, look at yourself in the mirror and ask, am I a disciplined person? Because throughout this trading journey, you're going to learn a lot about yourself. You're going to learn if you're greedy. You're going to learn if you're disciplined. You're going to learn if you're patient. You're going to learn if you can follow rules, if you can't follow rules. You're going to learn a lot. Because when money gets involved, emotions get involved. And emotions are bad for trading. So I want you to ask yourself, am I a disciplined person? And how can I change this if I'm not? And how can I apply my discipline that I have to my trading if I am a disciplined person? So create a trading plan consisting of the four things we went over today. The four categories. Predesignated risks. What are you risking? What are you willing to risk per trade? How much are you making per trade? How many contracts? When do you trade? Do you trade London session? Do you trade Asia session? Do you trade New York session? When are you gonna trade? When are you gonna take your trades? How are you gonna react when you're trading on high impact news days, on red folder days? What are you trading? Are you trading gold? Are you trading Nasdaq? Are you trading the S&P 500? Are you trading silver? Are you trading options, Tesla? Whatever it is, just have something consistent that you trade so that you learn how they move. And how do you enter? What are your confluences? Do you agree with ICTs? Are you a support and resistance trader? Are you I don't know, are you a order block kind of guy? Whatever your confluences are, whatever your strategy is, perfect that strategy and follow that strategy to a T. If you want to learn more about my strategy, I'll be coming out with more bootcamp videos talking about that really soon. And I mean, this video was just me yapping because it's just me yapping about discipline. I just feel like discipline is the most important part of trading. Without discipline, you got the best strategy in the world. You don't have discipline, you will lose everything. I know, because the amount of blown accounts, the amount of money wasted, the amount of money given into the market to learn that it wasn't my strategy that was losing me money. It wasn't my strategy that was keeping me unprofitable. It was the reason. The reason was myself, my discipline, me not knowing how to take a loss, me revenge trading, me saying one more, just one more, me over trading, me over leveraging, me saying nah, I risked 1% this trade, I lost $500, but I want to make $500 today, so I'm gonna risk 5% on the next trade so that I can make my money back and some. What happens when you lose that 5%? Now you lost 6% instead of just losing 1%. That's why discipline is so important. That's why I'm adamant on it, and that's why this video is me yapping about it, because yeah, if you understand discipline, you understand the market. If you have discipline, you can make you can make unlimited amounts of money. You can be the best trader ever if you have discipline. So, well, that pretty much sums up day one of the boot camp. That little yap session, I know, was a little different than the previous videos I make or my trade recaps, but I wanted to emphasize how important discipline was. Uh, Key takeaways from this video: have a trading plan. If you don't have a trading plan, then you have nothing to be disciplined towards. Um, Follow that trading plan to a T. Have designated risk. Risk 1% of your account. Take one trade a day. Don't overtrade. Don't revenge trade. Follow your rules. Follow your plan, and you will be profitable. As well as losses are a part of trading. Losses is a part of the game. But not learning from those losses, not journaling those losses, will just keep you stuck at the same spot. And you'll keep making the same mistakes that caused you to take those losses. Who knows? Maybe the loss wasn't even your fault. Maybe the market, maybe you followed your trading plan to the T, which this is a good loss. You followed your trading plan, you seen your setup, A plus setup, and you enter, you act, and you lose. Maybe it was a Trump tweet. Maybe it was news. Maybe I don't know. So much going on in the economy. Maybe it was just something, an outside thing that made the market not go in your direction, but you followed your plan and you know you did your best. Journaling that will help you understand that, and you won't feel so eager to revenge trade. You won't feel so eager to get your money back because you know that you did all you could, and the market just moved how the market wanted to move. As well as you have those bad losses where you know you didn't follow your plan. You know you over risked. You know you over leveraged. You know you revenge traded. You know you probably should have walked away. But writing these things down, journaling these things, prevent them from happening again, which ultimately will make you a better trader. Having a trading plan, having a trading journal. Every trade you take should go in that journal, and every trade you take should be following that trading plan. Excuse me. This is the start, and this is the key foundation of your trading. Once you get your strategy or how you trade, cool. It could be the best strategy ever. It could be like oh my gosh, I don't lose 90-80% win rate strategy. But if you don't have the discipline to follow that strategy and follow that plan, it's not gonna work. Or if you don't have the discipline to take losses and walk away, it's not gonna work because just it's not. It's not. Say you win. Say your trading plan wins 80% of the time. Okay, cool. You win 80% of the time. You win 4 days in a row. You win Monday through Thursday. On Friday, you're like, you know what? I'm winning so much. I'm gonna risk every single piece of profit I took from Monday through Thursday. Because that's how, like, my trading plan is that. I mean, not my trading plan, but my strategy is that good. I'm just gonna forget my trading plan. What? Trading plan? A trading plan? I'm profitable. I just made $5,000 this week, Monday through Thursday, for 4 days. I just made $5,000. I'm about to risk it all. You risk it all and you lose it all. You lose all the profit you made that week. And then you turn around like, dang, I really just lost all that profit. I gotta get it back. I gotta get it back. I gotta revenge trade. I need that back. The market can't have that. The market can't do me like this. The market's wrong. No, the market's not wrong. You're wrong. The market's not wrong. You're wrong. You're wrong for risking the hard work that you put in all throughout that week following the same plan that was consistent for you, that worked for you, that was helping you manage your risk. So now you revenge trade. You risk $5,000 more dollars. Now you're negative 10,000, or whatever you're risking. You risk $500 more dollars. Now you're negative 5,000. Now you're negative $500. You risk that 5,000 you made throughout the week. Now you're at zero. You risk another 5,000. Now you're negative 5,000. And it's just like a it's like a really bad habit. It's like a habit that's really hard to shake, but if you can shake that habit, it'll pay you in the long run. If you can just say like, let me walk away, like do things like that. Like when you lose, just walk. Just go take a walk. If it's really messing with your emotions that bad, just go take a walk. Or if it's really messing with your emotions that bad, just go to the, I don't know, go to the gym. Whatever you like to do to relieve stress, not my business. Go do that. Do anything but stay on the charts. Don't overtrade. Do anything but stay on the charts. And when you come back, look at your trade. Look at why you lost the trade. Journal it. Learn from it. I know I sound like a broken record, but it's really that important. So, yeah, that pretty much sums up day one of the boot camp. Hope you all enjoyed. Day two will be dropping tomorrow. Not sure what that video is gonna be on. We probably are going to. I don't know. We might get into some chart stuff tomorrow, or some more mental stuff. I'm gonna kind of break it up because you need both the technical analysis slash confluence slash trading part of things, and you need the emotional slash what's gonna keep you here in the long run kind of thing. So I'm gonna be splitting it up, 6 7. And yeah, that's about it. It's been M&Q Mondo. Thanks for watching. If you want to see more videos like this, make sure you like the video, subscribe to the YouTube channel, turn on post notifications. If you have any questions about this video or want me to cover a specific concept next in the next Trading Bootcamp video, drop a comment. Lastly, if you want to be a part of the trading community or a community in general and see the process of other traders who are maybe just as good as you, it's the same level as you, higher than you, lower than you, and y'all build together as a community, and you want to see my live trades and my breakdowns and more educational things, then I would advise you to join the Income Architects group chat, not group chat, goodness, the Income Architects Discord, which I'll be putting in the description down below. And thanks for watching this video. It's been a pleasure. Peace.